Commissioner for Financial Services and the Savings and Investments Union, members of the European Parliament, permanent representatives and ambassadors, members of the European and Economic and Social Committee, directors general and directors of the European institutions, bodies and services, representatives of trade unions and employers' organizations, and other authorities. Ladies and gentlemen, as General Director of New Economy International Forum, I am pleased to welcome you to this Forum Europa event, once again made possible thanks to the essential contribution of 5 companies that demonstrate their strong commitment to Europe and its citizens every day: Airbus, Iberdrola, Indra, Santander, and Telefónica. Today, we would like to continue exchanging ideas to strengthen the Union, and for that we have the honor of welcoming Ms. Luís Albuquerque, European Commissioner for Financial Services and the Savings and Investments Union. Although Commissioner Albuquerque's work is well known to all of you, let me make a very brief introduction before I give her the floor. As you know, after her speech, we will open the floor for questions. I look forward to getting them and kindly ask you to please write them as clearly and concisely as possible. That would be very helpful. Prior to joining the European Commission, Ms. Albuquerque held several senior public and private positions. Most notably, she served as Portugal's Minister of State and Finance from 2013 to 2015, as the country's Deputy Minister for Treasury from 2011 to 2013, and as Head of Issuing and Markets of the country's Debt and Treasury Management Agency from 2007 to 2011. Commissioner Albuquerque is undeniably a politician of exceptional caliber, known for her outstanding technical expertise and firm commitment to European values. It is for these reasons that President von der Leyen entrusted her with the critical task of mobilizing substantial private investment to drive the green, digital, and social transitions, safeguarding financial stability, improving access to finance for EU businesses, and enhancing opportunities for citizens to strengthen their financial security. We would like to thank Commissioner Albuquerque for accepting our invitation to speak at Forum Europa about her vision for the new legislature in her area of responsibility, and more generally about the future strategic direction of the European Commission in order to strengthen the Union. In recognition of her distinguished career, her strong political leadership shaped through years of dedicated public service, and her unwavering commitment to Europe, it is a true honor to warmly welcome Ms. Luís Albuquerque, European Commissioner for Financial Services and the Savings and Investments Union, to Forum Europa. Without further ado, Madam Commissioner, the floor is yours. Thank you very much.
Good morning, ladies and gentlemen. Let me begin by thanking José Luís and the New Economy Forum for the kind invitation and also for that very generous introduction. I have been asked to speak to you today about my ideas to strengthen the Union. As a European Commissioner, naturally, I have a great deal to say about my policy priorities and about Europe's role on the global stage. But this is not only a professional question for me, it is also a personal one. Just recently, Portugal marked 40 years of EU membership. As a Portuguese citizen who remembers life before accession, I've seen firsthand the transformation that EU membership brings, not just to a country's economy and governance, but to the everyday lives of its people. Like many of you, I carry with me a profound appreciation for what it means to be a European citizen and a desire to see a stronger and more integrated European Union. And like many of you, I am aware of just how fast the world is changing. The daily headlines from Ukraine and the Middle East are deeply troubling. The scale and intensity of this crisis, with the developments this last weekend, are a sobering reminder of just how precious and fragile peace and stability can be. And they reaffirm the core values we hold dear in Europe: human dignity, democracy, fundamental rights, and the rule of law. These are our guiding principles, and they are what leads us in times of uncertainty. We can no longer take geopolitical stability and multilateralism for granted. So let me be clear, strengthening the Union is not a choice, it is a strategic imperative. But with crisis comes opportunity, and I see the chance for Europe to take a decisive step forward together. That is why today I want to speak to you about a strategy I launched earlier this year, the Savings and Investments Union, or the SIU for short. It is a forward-looking initiative aimed at expanding Europe's investor base, particularly by empowering and equipping retail investors with the tools to invest wisely and with confidence in our own potential and in Europe's long-term future. The SIU is a way for us to create a true ecosystem for financing in Europe. In today's world, diplomacy alone is not enough to secure global relevance. We also need to ensure that our economy and our strategic capabilities can do the talking for us. And while the European economy has been structurally underperforming for some time now, and we need a major boost to our productive capacity, our economic fundamentals are solid. Inflation in Europe is easing and now falling below the European Central Bank's 2% target. Hopefully it will remain that way with recent developments. But it's paving the way for lower borrowing costs. Our public debt and budget deficits are more contained than in many other major economies. The EU produces nearly as many STEM graduates per capita as the United States, and our share of global patent grants remains competitive with other global leaders. We also have the financial means to back our ambitions. European households save around 1.3 trillion euro annually. Energy prices have the potential to fall sustainably thanks to the ongoing transition to cleaner, more secure, and more affordable energy sources. By 2030, over 40% of our energy consumption is expected to come from clean energy. And globally, Europe holds its weight. We are the leading trading partner for more than 70 countries and continue to expand our reach through new trade agreements. The goals outlined within the Savings and Investments Union have been built to address Europe's urgent investment needs. Without significant additional investment, we will not be able to drive innovation, sustain growth, and build resilience against external shocks. We need more investment, and this means we need a deep, dynamic, and interconnected capital market at the core of our economy. However, significant barriers, some of which are self-induced restrictions and vested interests, are preventing us from progress and from reaping the full benefits of the single market. My proposal for a Savings and Investments Union aims to push Europe through these barriers and to create a financing ecosystem that will benefit Europe as a whole, but most importantly, bringing benefit to the European citizen. To unlock more financing for EU businesses and EU strategic priorities, we need to broaden our investor base, especially by making it easier for everyday people to invest. That means fairer access and more attractive long-term investment options, including for retirement savings. A stronger, more connected financial sector will help lower costs and give people more choice, making it easier to turn savings into investments. Our SIU strategy has 4 pillars, covering citizens and savings, investment and financing, integration and scale, and efficient supervision. I'll take each of these in turn. Under the heading of citizens and savings, we are acting to give Europeans greater access to capital markets. Europeans are among the world's greatest savers, yet too often they lack the opportunities to invest their savings productively and see them grow. This is partly down to poor financial literacy. According to Eurobarometer, only 18% of EU citizens have high financial literacy. Among young people aged 18 to 24, that drops to 13%. To address this, one place, and we'll show them what they have earned and what they will receive upon retirement. On investment and financing, we will be working to make it easier for companies to access diversified sources of finance, including cross-border. For example, we aim to bring institutional investors more into play for our European companies, including through venture capital, private equity, and infrastructure investments. We will also revise our rules on the European Venture Capital Funds label. This will help to facilitate equity financing for our high-tech and innovative companies. We are also working to increase the level of securitization by banks in Europe. Essentially, this is a process that allows banks to repackage part of their assets, namely loans, and sell them to other financial market participants like insurance companies, pension funds, or other banks. On the 17th of June, so only last week, the Commission adopted my proposal for a revised securitization framework. This will help channel more investment to the real economy by increasing bank lending to EU households and businesses, including SMEs, and hopefully also cheaper credit, while also enabling investors to diversify their investment opportunities. This is the first proposal adopted as part of the Savings and Investments Union. This proves our commitment to putting this strategy into place as a matter of urgency. It's now up to the Member States in the Council and in the European Parliament to turn this proposal into law swiftly so its benefits can start flowing into the European economy. Integration and scale have been two of the most persistent challenges that have held back EU capital markets from developing. The fact that European firms are unable to join the scale and synergies of the single market is a huge competitive disadvantage for us. Our stock exchanges are smaller and less liquid than elsewhere, making it harder for companies to grow and for investors to engage. To put this into perspective, stock market capitalization in the US is almost 3 times larger than in the EU. Too often in Europe, capital stays trapped within national borders. Cross-border investment remains limited, and key infrastructures like post-trade systems are still too fragmented. When it comes to investment in innovation and scale-ups in Europe, the amounts of private equity and venture capital are far below where they should be for an economy of our size and ambition. That's why the Savings and Investments Union is crucial to unlock capital, lower costs, and create deeper, more connected markets that support business growth and innovation across the EU. We will be bringing bold proposals to break down barriers that hold back cross-border operations of market infrastructures, asset management, and fund distribution. Supposedly for banks, they don't exist anymore, right? And barriers exist in various forms: economic, legal, technical, operational, behavioral, and supervisory as well. The last pillar of the SIU is about supervision. Much of our financial supervisory processes in the EU differ across national borders. This is inefficient, costly, and makes Europe less interesting for investors. A more coordinated and effective approach to supervision is essential to support a truly integrated and resilient European financial system. We want financial firms to feel they're operating across one single market, rather than in a collection of different financial jurisdictions. And we can't have a single market if supervisors are applying the same rules differently. We are looking at enhancing the tools available to supervisors to reduce supervisory divergences, and we are considering the potential benefits of moving certain supervisory functions from the national to the EU level. The recent consultation we held should help to identify the best solutions. The Savings and Investments Union is one of the principal responses to Europe's competitiveness challenge. While it is not aimed at any one sector, there are strategic areas where greater investment is urgently needed. I'm thinking of defense and space, artificial intelligence, clean tech, biotech, and other cutting-edge industries that will shape Europe's future. These sectors tend to benefit most from private capital, especially for scale-ups and entrepreneurs who are ready to take risks and drive innovation. So while the SIU is not sector-specific, it is very much focused on building a financial ecosystems that will allow all companies in all areas of business to strive. In doing that, we pay particular attention to more innovative startups and scale-ups so they are able to grow in Europe. And to conclude, I want to go back to the initial theme of my remarks, ideas that strengthen Europe. The SIU embodies this mission, not only by driving economic strength, but also by deepening structural integration and reinforcing Europe's role on the global stage. This is not just a concept. This is an imperative strategy that needs to be put in practice urgently. On the Commission side, we have committed to publish our flagship proposals by the end of the year. We now need to make the different stakeholders, and not least the Member States in the Council, realize that we need action from all sides, at EU level, as well as national level, and from the industry. Let me leave you with two clear takeaways. The SIU is a key enabler in our strategic path to respond decisively to today's geopolitical and economic challenges with agility and unity. And it stands to bring real positive change to every member state and every citizen across the continent, boosting competitiveness and driving sustainable growth for a stronger, more resilient Europe. I want to now thank you for your time, and I look forward to your questions. Thank you.
Thank you very much. Thank you very much, Madam Commissioner. After the Q&A session, you will have a few minutes for closing remarks. Let's start with the Q&A session. We have a question on geopolitical volatility. In light of recent US airstrikes on Iranian nuclear facilities and Iran parliament's endorsing closure of the Strait of Hormuz, which carries about 20% of global oil and may significantly elevate energy prices and economic volatility, are there any contingency or risk mitigation mechanisms being considered to protect EU retail investors from sharp energy-driven market swings? And will the SIU be adjusted in response to tighter liquidity or inflation pressures caused by an oil choke point shock?
Thank you. It's a very timely question. Well, these are very, very recent events. There's still hope that developments will be less dramatic, but that hope is sort of fading, probably, as we speak. I would say that, if anything, whatever is happening around us makes the SIU not only more important, but more urgent. So I would urge everyone to actually support the project and try to get it implemented as early as possible. When we talk about retail investors, I think that the biggest threat that retail savers in Europe face currently is actually inflation. Because if you look at how people keep a significant part of their savings in deposits in the banks, we can easily see how the real interest rate has actually been negative in recent years. If we face, again, inflationary pressures, this will only be worse. So engaging people to go into capital markets is actually a much better option for them in the long term. And I would, again, argue that short-term volatility, no matter how significant, should not be the main point for people investing in the markets. Obviously, if people have a very short investment horizon, they may not have enough time to recover from negative periods. But when we talk about engaging retail investors into capital markets, we are talking about long-term investments, people that save for 20, 30, even 40 years for their retirement. And in such a long period of time, actually, the short-term volatility is smoothened out. It doesn't really matter. So thinking about ways to protect retail investors from current volatility, it doesn't seem to make much sense. And actually, investing in capital markets is not capital guaranteed. by the nature of it. But what we know is that with properly diversified portfolios and long-term investment horizons, this should lead to a higher return and a better outcome than we see by simply putting our money where the number of euros is guaranteed, but actually what we can afford to buy with it is decreasing. And that is just sad, I'd say.
Thank you very much. There's a question on banking consolidation. One of the priorities of this Commission has been to strengthen Europe's competitiveness, including in strategic sectors such as finance. However, in banking consolidation operations such as BBVA's bid for Sabadell in Spain or UniCredit's for BPM in Italy, both of which have triggered strong political reactions, according to the question, some commentators observe distinctly national approaches, even when, as you have stated publicly, the real competitors lie outside of Europe. What can the Commission do to ensure that banking consolidation within the EU is not obstructed by domestic political considerations and that shareholders can fully exercise their ownership rights? Do you believe that the positions taken by some national governments could limit the attractiveness of those countries or even the EU as a whole as a destination for investment? Thank you.
Thank you. Well, as you know, the Commission does not comment on specific cases, so I will give a general answer. What I've been saying is that actually we should see more cross-border bank mergers, and that was the expected outcome of a banking union. We would have a single supervisor, a single market, same rules applied across the whole banking union, so the synergies of these cross-border mergers should be obvious. So if anything, I'm relatively surprised that it hasn't happened before. When it comes to the rules which apply to bank mergers, whether cross-border or within each member state, the rules are very clear. For significant banks, we have the European Central Bank to assess from a prudential perspective if the merger is adequate or not. And then we have the competition authorities who will assess if this brings any issues or concerns that have to be remedied within the competition framework. And that's it. So supposedly there are no other powers to be used, and obviously this is the framework, and again, I cannot and will not comment on particular situations.
Thank you very much, Commissioner. We have a question on EU taxonomy and green networks from Telefónica, one of our sponsors. Thank you for participation and interesting comments, Commissioner. In the past few years, as the newest telecom network technologies are green, the ICT sector has been trying to include networks in the EU taxonomy in order to first reach an appropriate representation of the decarbonization full potential of networks and digitalization, and second, to help recover the digital targets investment gap with green taxonomy capex through the deployment of green European networks. Bearing in mind the comments made within the Draghi report on the need to strengthen Europe's technological sovereignty and the required investments, could we expect that the Commission will support the inclusion of new taxonomy activities, notably telecom networks? If that is the case, how would it be prioritized so that they are included in the next delegated act? Thank you.
Thank you for a very specific question, which I will not answer as specifically. So let me talk about broadly on sustainability. And as we all know, this is one of the first issues that we have addressed as a Commission, because sustainability is something that actually started as a, I'd say, market initiative. Everyone started to talk about ESG, about sustainability, people were reporting, but there were no standardization, no rules. Everyone was trying to say, we are green, we are fantastic, we are sustainable, but there were really no rules and standards. So the Commission was basically asked to come up with some standardization. And as often happens, we got carried away and we took it a bit too far. Because we are very inclusive, we want to have everyone on board, from the industry to NGOs, anyone involved, and everyone would like to know something. And wouldn't it be nice if we could have information about this or that? And it became an incredibly detailed framework that actually turned out to have unintended consequences and be burdensome for companies, which obviously was not the intention. So we are now tackling that, making the framework easier to comply with, more meaningful. We are now looking into detail how many data points can we actually exclude, because probably investors don't care that much about them, and it's just burdensome for companies to report. And we want to make sustainability a strategic choice for companies, not just a compliance exercise of ticking the boxes. It has to be more meaningful than that, because again, that's how it started. That's what we wanted to deliver. So we are now streamlining all that. Taxonomy is indeed a very complex framework. I don't think that we will likely ever close completely or definitely the number of activities that are taxonomy compliant, because this is evolving very fast. Even today's activities, which may not be taxonomy compliant, they will evolve and potentially become taxonomy compliant in the future. So this will mostly be a technical assessment that we have to make. So considering the criteria that we have, which activities actually fit into the taxonomy, making all the criteria clear, easier to understand. The taxonomy is meant to help, not to create problems. That is also what we are trying to assess, but this is mostly a technical question. Do these telecom networks, I think that's the question, fit into the criteria that we have? I do not have the technical answer, but my services are looking into it. And again, we have no prejudice against any particular sector. We have the criteria. If it matches the criteria, it will be included. If it doesn't, it won't. But this will continue to be, I would say, almost by design, a framework which will evolve over time. So we'll have to go back to this discussion from time to time. Hopefully, we won't take forever discussing, so but by the time we actually agree on something, it's already outdated. We also need to work on that and be faster. Thank you.
Thank you very much. We have a question from Michel Kobosco, a member of the European Parliament. We are discussing EU competitiveness. The 28th regime is being proposed for startups. Can we imagine an experiment with a 28th regime for pension funds, a truly pan-European pension fund investing in Europe's future?
Well, the 28th regime is going to be a challenging exercise. First, I'd like to say that the way, well, first an important point, it is not in my portfolio. It's with DG Just and Commissioner McGrath, so I'm stepping a bit out of my direct competencies, but it has obvious implications to my portfolio and others. So I see the 28th regime a bit as a framework. It is a way of harmonizing specific legal aspects so that anyone, any company operating cross-border in the EU could opt for that regime and say the same will apply. So we can be talking about corporate law, we can be talking securities law, labor law, tax regime. Basically anything that affects a company's life could be included in a 28th regime. And it doesn't have to be one 28th regime for everything. As I'm sure members of parliament know, this would probably be impossible to discuss. even more, and agreeing it would really be unattainable. But we can have several 28th regimes, each addressing a substantial part, like insolvency regimes, for example. When it comes to pensions, pension funds, as you know, are national competencies and possibly one of the toughest political discussions we can have in many member states. And yet, I've been listening about this discussion and engaging in this discussion for, I'd say, at least 15 years, maybe more. Yeah, actually more. And people keep saying that we can't do it, the transition is too expensive. And if we had started, when we started talking about it, the transition period would be over by now. This is the kind of problem that doesn't disappear. It only grows. So yesterday would be late to address it. We have to do it now. It's difficult? Yes. Will it ever get easier? No. So we should tackle it now. Imagine the impact of having a full generation of pensioners in too many member states that arrive at retirement age and suddenly discover that they are poor. What will this do to Europe? I'm not even talking about economic consequences. I'm talking about political consequences. This is a disaster that we cannot allow to happen. Yes, it's going to be difficult, but we are living longer and longer. And in many member states, we have basically pay-as-you-go systems. So we are expecting that fewer young people support pensions for more older people who live actually much longer than before. By the time the age of 65 was determined, the average life expectancy was 67, and there were lots of children. So this shows that the system has built in it's not sustainable. It is not possible to make it sustainable like this. It is a big problem. It's going to be a huge political discussion, but we must have such discussion. We have that responsibility. This is from the social, human, political angle. But on top of that, if we manage to build supplementary pension systems that capitalize, actually this can have a very positive impact on capital markets, because it is the most efficient way of taking retail savings and putting them to work in capital markets. If you look at any developed capital market, you will see significant pension fund industry. They always go hand in hand. And they're very important, because if we have these savings invested into capital markets, we will have a better funding structure for companies in Europe. Companies will be able to create better jobs, to pay better salaries that will benefit people again. So it is a virtuous circle, even if starting to draw it will be very challenging. We will be recommending this within the SIU strategy, that these supplementary pension pillars are developed with auto-enrollment, with tax incentives, but it's up to member states to decide whether they implement it or not, even if this is probably one of the most needed structural reforms in many European countries. But again, we will not be able to do much more than recommend and then follow and push, because this is member states' competence. That being said, when I go to member states, I always at least try to engage with trade unions, because I think we cannot do this without the social partners. This is about engaging the social partners into the discussion so that people can understand the challenges we have, the problems we need to face, and work together to find the best solutions. It's going to be very difficult, but as I said, it won't get any easier if we wait longer. So I think the time is now.
Thank you very much. There's a couple questions for the Savings and Investments Union. Accountancy Europe, there is a question from them. Harmonizing tax has proved to be very cumbersome, almost impossible. What can we do to make it work for savings and investments in the EU? And there's another question from Kasia Roman from the Swedish Enterprise. From your point of view, what parts of the SIU bear the highest risk to be stopped or watered out by the Council or the European Parliament?
Well, I think that they all face a significant risk, honestly. We have the main problem I see two main problems. One is speed, or the lack of it. We take so long between identifying the problem, thinking of the solution, proposing, discussing, transposing, transition, and implement it, that by the time we hit the ground, the problem has moved on. And we keep missing the targets, obviously. So we cannot say in the same sentence that the world has changed in 3 months and that we will still take 2 years to make a decision. It doesn't add up, and I think it's high time that we collectively make an effort to deliver faster. This is one part of the issue. The other is how we continue to be very focused on the diversity. And I keep hearing that our motto is united in diversity. True. But the balance between united and diversity, I think, is not really right. We need to think more about the united than on preserving the diversity. It's finding the right balance. I'm not saying that we should ignore the diversity. We will never be uniform, and that's a good thing. But we cannot say that we want to be European and preserve every single thing that makes a member state different from one another, because it won't work. It simply won't work. We need the scale that acting together brings us. So when we go to Council in particular, and we find that every member state tries to draw a red line, we understand that actually compromise is an exercise about the minimum common denominator. Minimum common denominator is not enough. And by the way, that's not the meaning of compromise. Compromise is giving in. That's what we do in our personal lives, right? When we compromise, we give in. Because the others involved will also give in, and in the end, the outcome will be better for all, collectively. No one will get exactly what they want, but collectively we will all be better. And this has not been the approach. So I think that it is about attitude and is about believing. Because when member states say we support the SIU, I want that translated in supporting the measures that will bring SIU about. Because just liking the concept and not liking the measures will definitely not get us anywhere. So it is difficult, yes. It is challenging, absolutely. And I have been in a government. I know what it's like to be a national politician and to be answering before your own constituency. But I also know that if you think European, you will be delivering the best possible solution at national level. And that position that many national politicians take, and it's not a new thing, that's saying, whatever is good, I did it. Whatever's bad, it's Brussels to be blamed. This is not helping at all. So it's really time that we have a different attitude, think European, and think we are not competing against each other. That is the wrong focus. If we compete against each other, what we will see is our real competitors growing stronger and stronger. It won't work. I mean, I think it has been tested, and it won't work. We really need to do that. Where do I expect difficulties? Everywhere.
Thank you very much, Commissioner. There's a question from Thomas van der Berg from the Dutch Permanent Representation. You mentioned the securitization proposal to be the first of the SIU strategy. At the same time, there is already a proposal on the table resembling a core pillar of the EU capital markets retail investment strategy. In earlier interventions, you underlined the need for fast progress. What are you planning to do to make sure we succeed to agree on this core SIU file?
Yes, actually the retail investment, well, the securitization, we just approved it in college last week. Now it's up to co-legislators to decide how fast they want to address this and hopefully agree in something very similar to the original proposal. On the retail investment strategy, I've been visiting all member states, and I was visiting Spain the other day. And on my briefing, there were some remarks about the Spanish presidency and how hard they have worked on some files like the retail investment strategy. I'd like to remind everyone that the Spanish presidency was in 2023. Mm-hmm. This is 2025. We are still discussing it. So this is a good illustration of what I was saying before. We want to have more retail investors engaged in capital markets. Because if you look at where it happens, you realize you have wealthier citizens. We actually save a lot more than the US, and our people are less wealthy. That should be an indication that we are not doing things right. So the retail investment strategy is about facilitating the investor journey. It's about making it easier and more interesting for people to engage in capital markets. It's also trying to address a problem which exists, which is about the conflict of interest emerging from the fact that there are inducements. When someone, in a bank for example, sells an investment product to a client, they have inducements. That means that they will get an amount for each product that they sell. They have these objectives, you know how it goes. And that, by definition, creates a conflict of interest. Is this really in the best interest of the investor? Or is it just something that people are being pushed to sell and have their own interest to sell? And we are trying to solve that balance, which is admittedly challenging. So it is about making it visible. If I'm buying a product and the person selling the product to me is actually making money from selling that and not something else, I should know. I should factor that in my decision. I'm not saying that I would decide differently. I'm just saying that I should know. At least I should be informed that person also has an additional motivation other than just trying to give me the best thing I could get. So it's about making this disclosure better. But we do need to address other elements of the investor's journey and this engagement with retail investors, because some of the frameworks we have put in place, namely coming from the national consumer protection angle, are just too restrictive. We've been protecting investors even from themselves, which is probably taking things a little too far. We need to address that. Yes, it's very important, especially because of the history we have of people actually being subject to fraud and scams and being pushed to buy the completely inadequate products. We need to protect them from that. But we cannot have a rule that says you can only invest in this product if you have invested in it before, because that's an impossible condition. If I'm not allowed to invest the first time, how will I ever fill that condition? So it is, well, it's not exactly like this. It's a bit of a caricature that I'm making, but it has to be better tailored, and also because we want to explain to people that, yes, if you invest in capital markets, you may lose money. That is true, but you also may win. The risk-return is a relationship that everyone should understand. If you take more risk, you have the possibility of a higher return. If you want zero risk, likely you will get zero return, or very close to that. So it is about making people understand that relationship and then allowing them to take risk in a framed, properly managed way, but allowing people to take some risk. So yes, there is, hopefully we will be able to close it, I would hope still this year, finally.
Thank you very much, Commissioner. There's a question from Godino Sebastian from WWF. To boost venture capital and private equity, where the EU lags far behind the US, will the EU propose an impact investment category in the SFDR review? It would benefit startups and scale-ups and align with objective of many retail investors to make a positive impact with their savings. And there's also another question on sustainable finance from Aithea Astor of FEAD. Will there be a third platform on sustainable finance? And if so, when will the call for applications be open?
I'm sorry.
So there's a question on SFDR review, including an impact investing category, and another one.
The second one.
The second one, the third platform on sustainable finance.
Yeah, well, on sustainable finance, we are working on several different fronts at the same time. As I said, the first omnibus package was actually addressing sustainability reporting. We now have a bit of a challenge because we are reopening level 1 and level 2 at the same time. And level 2 derives from level 1. So before we have level 1 close, going into level 2 is a bit of a bold step because we may have to address it again once we close level 1 if the outcome is not what we expect. So at this stage, I would say that I don't know exactly where we are going to land, both on level 1 and on level 2. I know what the Commission proposes and what the Commission would like to do, but Parliament and Council also will engage in this process, and we will have actually to discuss exactly on how it is going to look like. So Currently, what we know is that by the end of the process, everything will have to be consistent, which is actually a bit of a problem we also have on sustainability, that given the fact that it was a file where we did lots of things at the same time in parallel tracks, there are inconsistencies and overlaps that we also need to address. So we are now taking this opportunity that we are reducing the burden of sustainability reporting to also address all these overlaps and all these inconsistencies. And in the end, when we get to the level 2, we will need to make sure that it is consistent with level 1. But everything is in a bit of a flow now. It's all happening at the same time. I know this brings uncertainty to the companies, but honestly, there is no other way. So I think that the best we can do is try to move faster and clear this uncertainty as early as possible. And again, Parliament and Council should help us on that, because we need to clear this uncertainty. But I think it is inevitable. So, and we are engaging with the Platform on Sustainable Finance and with EFRAG and all the relevant stakeholders, and we are all working together to make sure that that consistency will emerge on the proposals and then also on the final result. But everything is moving right now.
Thank you very much. There is a question on the financial data access legislation. Could the Commissioner please share her thinking on the recent FIDA developments and how to ensure a business-driven market demand approach?
Yeah, that's an interesting question on FIDA. Well, FIDA is a file that, if I can be blunt, incumbents don't like much, and I see why. FIDA is about giving the user, any of us as an individual, the right to say, I want to share my financial data with someone so that someone can provide me a service which is tailored to my needs. For example, I have an insurance pack of some sort, and I may want to know if there is anyone else out there in the market that can offer me that at a better cost or with better conditions, for example. So FIDA is about sharing data. People will, if we obviously approve the file, people will be sharing their data if they want to. And we are addressing the concerns that were expressed by the co-legislators in the process. There were concerns about the security of the process, about how can we protect ourselves from some market participants who could be in an advantaged position not being European. And we are addressing that. We are also addressing the fact that we know it will have significant cost impacts on the incumbent industries, so we also need to take that into account. But I don't think that any of this reason is reason enough not to do it. First, because it's happening. I think sometimes the efforts to prevent some of these more ambitious files that come from data sharing, innovation, new technologies, I think it's just futile to prevent them from happening in Europe, because they're happening either we want it or not. And the only difference is, will we have European companies benefiting from it, or will we continue to do all this through American companies? Because that's the only choice we have. It's not about having or not having. It's who do we allow to actually engage in this? And we are also worried about competitiveness. This is also about competitiveness. Is it going to be painless? No. It's going to mean that there are costs which have to be borne. We will do our best to mitigate the impact, but the impact will be there. There are financial market participants who have legacy IT infrastructures that desperately need to be modernized, with or without FIDA. That has to happen. And yes, that's going to be costly, but it has to happen. Technology is evolving very, very fast. We need to follow that. And again, we need to follow, not lagging behind as we have been doing. So We have to be ambitious. There was a lot of pressure to just drop that file and do nothing. I am resisting that pressure. I will do my best on the negotiations. It's not really just up to me. I think that the outcome of the file is very important. It empowers citizens. It gives us the right to use our data the way we see fit. It allows many of our most innovative companies, like fintechs, to actually use that data to provide better services. It will also, we have also a provision because data are valuable resources, so we have now also included the remuneration of such data for those who hold it. We are trying to accommodate to concerns, but I am doing whatever I can to keep the file alive because I really think we need to welcome this kind of innovation, and I would like the industry to be more supportive. Thank you.
Thank you very much. This could be a day-long conference. We get to the final question before your closing remarks. Last week, the Bank of France Governor Villeroy de Galhau stressed the need for a binding deadline, January 2028. He suggested for deepening Europe's financial integration, including retaining savings domestically and channeling them into strategic areas like AI, green transition, and defense. What are your views on this binding deadline proposal by the Governor of the Bank of France?
I would love to have a binding deadline and to say I will deliver the SIU in 3 or 4 years or 5 or whatever the deadline. My challenge in defining a deadline is that, well, first it is not up to the Commission, so we would have to have the co-legislators agreeing on the deadline, but it's also the SIU, if I can describe the strategy, is everything everywhere all at once. So it is difficult to pinpoint exactly what the SIU is, because the SIU is about engaging with retail investors. It's about improving financial literacy. It's about setting up savings and investments accounts. It's about engaging into supplementary pensions. It's about addressing supervision and making it more efficient, and that will require changing different pieces of legislation as well. It's about assessing the competitiveness of the banking sector and see what measures, if any, we need to put in place after that. So it is a it's also about the 28th regime, which is not in my remit. It's about venture capital, private equity, trading venues, post-trading infrastructures. It's about all this, because it's about a financial ecosystem. A financial ecosystem is a very broad concept. So if the other stakeholders want to join forces and say, yes, we will agree on all this and implement all this in a specified framework, I mean, I'll be cheering from front row. I honestly think it would be great to have such a deadline. My concern is only if we set a deadline for a part of the process and then we say, well, we're done, we delivered on that part, on that deadline, so back off now. And that's the only concern I have with setting a deadline, because I see it as very challenging to set a deadline for such a broad remit, and especially some important parts where we can only make recommendations but not decisions, because these are competencies still at member states level. Like taxation, by the way, which is one of the main fragmentation causes in Europe.
Thank you very much, Commissioner. Please stay where you are. Before we get a final comment from you, could we please hear from one of our sponsors, Ms. Alicia Sanchis, Head of European Government Affairs at Santander. The floor is yours. Thank you very much.
¿Funciona? Sí. So thank you, Commissioner, for being with us today and for sharing such a clear vision of what is needed to unlock the full potential of our capital market. Gracias, Diego, and New Economy Forum for providing this valuable exchange platform. Let me begin by congratulating you on your continued efforts to advance a truly effective savings and investment union. The recent proposal on securitization is a concrete step forward and one that deserves our full support. The financial sector, as you said, is central to funding our economies, whether on defense, digital transition, or digital transformation and green transition. These are critical areas where These are critical areas where public funding alone is not sufficient. We must mobilize private capital. And for this, we need to put our savings at work. And in doing this, we need to reflect on structural questions such as how to incentivize equity over debt, the role of the pension schemes, or the level of risk aversion within the system. But, these structural things are necessary. They will take time. And the banking sector will continue to play a pivotal role in the economy. That's in this context that we really look forward to the upcoming report on the competitiveness of the banking sector the Commission is working on. But let me briefly highlight two elements we consider essential to this goal. First is that we need a simpler and predictable regulatory and supervisory framework. So we know that beyond the already complex Level 1 legislation, there are hundreds of Level 2 standards and supervisory interpretations that often introduce additional layers of complexity and result in overlaps and at times inconsistencies. The second, of course, as you mentioned, is scale. I'm not going to expand on how desperate we need to move forward on the single market. For the banking sector, that means advancing the banking union and, in particular, a European deposit guarantee scheme. So the good news is that to move forward on the simplification and further integration agendas are on our hands. So we not depend on others, no, to advance on these two elements. So I'm confident that under your leadership, Commissioner, we will make decisive progress towards a genuine savings and investment union capable of driving sustainable growth and prosperity across Europe. Thank you.
A final word from you, please, Commissioner. Thank you.
Thank you very much. Thank you for the support and the encouragement. It's really very important that we have that from the industry, because this is an effort that only works if we are all pulling in the same direction. It really is challenging, and I do understand the different positions, but it is my role, my job, my obligation to continue to push. You said we have to put savings at work, obviously, because the good thing about Europe is that we only depend on ourselves. We have the money, we have the skills, we have the capacity, we have a market of 450 million people. And all the decisions have to be made by ourselves. We don't depend on anyone else. So that is the glass half full perspective. We can do it if we really believe that this is important and necessary. On your very valid comment on, yes, we want to move more into equity and less into debt. By the way, the productivity problem we have, one of the root causes is exactly the fact that we have too much debt and too little equity in our corporate sector. That is one of the main issues. The other one is that our companies are not big enough. We need way more big companies. We all worry about SMEs, and rightly so. They are the fabric of our corporate sector. But we need to show some love to the big companies, and we want to have our companies grow, because that helps productivity. That helps. I mean, you cannot bring the scale of innovation with an economy constituted by companies up to 20 workers. It just won't work, as we all know. It's very easy to understand. So all this needs to be better balanced. A more balanced funding, a more balanced economy with companies that can actually grow. And they need to grow on equity, not on debt. That brings me back to the taxation part. All our tax regimes are favoring debt over equity, which is a major problem, but Council killed a project that was actually there to address this imbalance. We need to go back into that and have that discussion again, hopefully to now lead to a good result. So that being said, yes, even if we do everything right and fast, the change into the shift from banking to capital markets to get to a more balanced approach is going to take time. So yes, banks are very, very important. We continue to count on banks, obviously, to help us on this. I think banks would also benefit tremendously from the development of capital markets and from companies having more equity because their risk profile would go down, so it would make it easier for you to lend. So it's a win-win kind of project. But yes, so we will address that in the competitiveness report. We will be looking at what is the competitiveness landscape of our banks, and we will take it from there. So no preconceived ideas. We'll take it from there and see what the main issues are on the banking sector. This will have to be a functional ecosystem, as I said before, and we will need to get this scale. I also hope that as we develop capital markets, we see a resurgence of the interest of our European banks into investment banking, because I'm not sure exactly, it's a chicken and egg situation. I'm not sure exactly whether we no longer have investment banking because there's no capital markets, or if we are losing capital markets because there's no investment banking. Either way, we have the two problems. And whenever there is a significant capital market transaction, we have to bring in an American bank. It shouldn't have to be like that, right? So it's also developing that, and obviously we will need the banking sector to be on board. So I'd like to conclude by thanking everyone for your time, for your questions, and hopefully we can continue to engage. There is a lot of work to be done, and I hope I can count on each of you, literally each of you, to support this strategy, because everyone is needed for such a big challenge as the one that Europe is facing today. Thank you.
Thank you very much, Commissioner.